I think investors are selling in May. One reason is because we saw the third strongest year-to-date climb for the S&P Equal Weight 500 since 1990, and history says we normally then digest some of those gains in the month of May. I think that what is also causing investors to be a bit worried about stock prices is the reports for CPI and PPI, two inflationary reports that came out last week that were much stronger than anticipated. So I think investors now are ratcheting down their earnings and price forecasts for technology and growth shares. And as a result, that is what is triggering the weakness in May and is not a very good start to the traditionally challenging sell in May period. Investors are not convinced that that inflation is something that's going to be a temporary flash in the pan. I think investors are worried that maybe the Fed is getting behind the curve in terms of inflation and what they will have to do in order to quell the inflationary trajectory. So I think investors are building into their price models higher interest rates that might occur earlier than expected, and certainly a tapering of bond buying. So right now, I think investors are saying, I'm going to take the money while I can and worry about the new forecasts a little later. I don't think the possibility of higher taxes is pressuring stock prices, primarily because it seems as if we do get some sort of a tax increase. It will be very modest, primarily because the Democrats don't have a significant majority in the House. And as a result, there will have to do an awful lot of bargaining, and none of the Republicans want to approve higher taxes, and not all the Democrats want to raise taxes either. So I think that if there is a higher tax, it will probably be very, very modest, and that all of the stimulus will have to be paid back down the road. Certainly, employment is tight, mainly because not a lot of workers want to go back to work for whatever reason. Maybe they're getting too much to stay at home in terms of pay. Maybe they don't have the child care that they need in order to then leave the home. Certainly, I don't think that inflation is going to be affected by the number of people who are staying at home. What we are finding is that states are now ending sooner than anticipated the support payments, the additional unemployment benefits. Some are doing it currently, some are going to wait till the end of May, some into June, et cetera. But the trend seems to be that there are enough jobs out there, so go out and find them, and we're going to stop paying you to stay at home. Trajectory of the stock market is higher over the intermediate to longer term, in our opinion. And what investors have to look for, if that is going to change, is a sharp increase in interest rates, as well as the likelihood that the Fed backs away from its pledge not to raise interest rates until 2023. I still think that with earnings expected to be up 50% in the second quarter, 30% for all of 2021, and then up again by 15% or so in 2022, that the economy continues to expand and there is upside potential in the stock market. However, I think we are going to be going through a near-term period of volatility and possibly even additional price declines before the market starts to work its way higher once again. So I would say that you don't want to be selling out. Maybe you want to pick your stocks very carefully in the future, but look forward to a favorable finale to this year. Well, when investors are taken by surprise, then you tend to have a sharp drop in equity prices. What we're seeing now is an anticipatory decline in share prices because investors expect the Fed to start to raise rates more quickly than is currently anticipated by the Fed itself. So should it come to pass in 2022 that tapering will take place and that there is a likelihood that the Fed will need to raise rates then I would tend to say that yes, there could be some pressure, but probably not a sharp sell off because investors were not taken by surprise. It's usually when the unanticipated happens that triggers corrections or even bear markets.